Good day. Ira Epstein of Linn Associates with your agriculture update. And this update is for Thursday, the 12th of September, 2019. So here we were waiting to see the WASDE report, supply demand in the grains, some yield numbers. There was no change in the acreage. The market had its little bit of play. And then we started hearing something else. And I want you to remember today is pork and bean day. And what do I mean by that? The Trump administration decided to postpone tariffs on China that would go into place October 1st for 2 weeks. At the same time, China decided to lift tariffs so that they could buy 5 million metric tons of soybeans. Well, you can imagine what that did. The traders started looking at it, and they looked at what China said about pork and beans. Yep, they're looking at pork as well. Hogs went limit up. In the market, we think they'd be another limit tomorrow, the way that the market is bidding as we're looking at option strategies and the spreads as to what's going on. That kicked the market up. The soybean market up 29 cents today. All the other markets drawn. So today was a day where maybe what we're seeing, and the word is maybe, nobody knows. The guess is that maybe President Trump wants to do things in increments. Rather than do one grand deal, make everything like a house of dominoes. I don't know how to say it. It doesn't have to collapse, but you get the first one set, then you get the second one set, rather than going for the game. And if that is the case, we saw a breakthrough in that today. We don't know. We don't know what's true, what's not true, and you're always a tweet away from God knows what. But that's what we think happened today. So as we take a look at a weekly area chart of closes, for the week, we're up 38 cents in beans, 29 cents of it happened today, and the market is back over that 18-week moving average of closes. Therefore, the thrust is up and the bias is turned up in the market. What else? Remember what we were yesterday. I have been showing this for about a week now, week and a half, saying I think we have a descending wedge. And on a descending wedge, the pattern is typically one where you're making these lower highs, but you don't follow through on the downside. Some will even say that we have a triple bottom in place, and you can argue that as well. I was holding session today, if you will, in our firm, explaining that while this market is broken out to the upside, and you certainly have to respect that until these lows are taken out, the game changed. And this was the breakout day. Now we'll see if the market can follow through. What else changed with it? The swing line. You've gone to higher lows, higher highs. Bullish until 864 is taken out, and that from here is 31 cents away. What else? You got over the 100-day average of closes. Now, yesterday we were talking, the first resistance was that number. The 200-day is way up here at 915. Don't think it can't be hit. I mean, if this thing had got legs to it, surprises can happen galore. The Bollinger Band, you went through both. The Bollinger Band's 884 3/4. The 100-day average is 896 1/4. You slid through both. Therefore, I wouldn't be surprised when the market corrects that it wants to come and see what that's made out of in the market. And momentum is pointing up. And admittedly, on a 30-cent day, you're going to look for it to get overbought. But there is an event here. You've got sideways action on a breakout of a descending wedge that is taken off to the upside. Being short is not the place to be. The game changed on you today. Interesting that it changed today when I often tell traders you don't want to go through these big government reports. I didn't know anything with the president. Who did? But think about it. John Bolton is gone. The president's suddenly responding to the need of President Xi from China. He doesn't want to insult him during the first 2 weeks of the 70th anniversary of the new China, so to speak, when the People's Republic took over there. Does that mean they're going to pay all attention to our holidays? I'm telling you, trying to figure this out, very difficult, but I personally think there's a whole change that just shifted. And I think we're dealing now going forward with small wins. Each one counts, and they can all fall apart if you don't get to the intellectual property, but the taunt has changed, and changed big. And if you think it's just here for a week or two, I don't know. It seems to tie together very nicely with the Chinese coming into America to have further trade talks. I do believe we're going around 14, 15, but I do think that the tactic has changed. I could be wrong. In the meal, next resistance spot, the upper Bollinger Band. Trend is turned up. The momentum is up. The bias is up. Why not go to that number? That number's 302 in case you're interested. In the oil market, you ran up to the upper Bollinger Band, ran into the brick wall there. So this market now, you've gone from almost the lower Bollinger Band. You did hit the upper one in 4 days. That's pretty fast movements as you're going, but I would expect to see some resistance there. In the corn market is now, it lost the embedded reading, if you'll recall, right here. When you do that often, I wish I could use the word always, but it's not accurate. Often, that's a sign that if it doesn't re-embed the next day, the price and the 18-day average are going to try to make them come together. You didn't do it yesterday. You certainly did it today, and I think you'd agree. It didn't run very far. It doesn't have to. Now you're in an uptrend until today's low is taken out. If the market can rally further, the upper Bollinger Band's resistance, it may want to play around that 18-day average for a bit, but you've changed the pattern of the market. In the wheat market, we've been in an uptrend, and I've been pointing this out the past few days. And the market coming up just missed that upper number. That was Tuesday. Here we are yesterday, and now you've got to figure, do you want to go through the report? And as it turns out, the market lifts, and the Bollinger Band, 486.5, well, you hit 486. I think it's close enough. Doesn't mean you can't go higher, but you're right there at the resistance point. In the sugar market's still riding the lower Bollinger Band. Remember what I said yesterday and all the way through. You have this embedded reading. An embedded reading means the market is converted from being oversold to locking in a trend, and it stays that way until the red line of the slow stochastic gets over 20. It also implies that rallies in the market are going to get sold by the pros until that momentum is lost. Ideally, to look at the key moving average under where they're selling or a Bollinger Band, possible targets. In the coffee market, you're fighting a battle at the 100-day average in the upper Bollinger Band. You are overbought. Certainly a friendly market, and what I did say was you've broken out. This first move here over these Bollinger Bands, you haven't done that. You have to go all the way back into July. The market has changed its character. Yes, you can get a correction, you're overbought now, but the character of the market has changed. Cocoa's still bullish. Overbought, but still keeping to the higher low, higher high. Need I show you how the market keeps fighting at that upper Bollinger Band? It's very typical. It's not running away. It doesn't have a major report to run away on that I know of. Now, this almost reminds me of the soybean chart. Sideways action, you've broken out. You'd have to take out 58.98 to negate the pattern right here, and I think pullbacks into that Bollinger Band, well, I think there's a whole group of people here. Take a look at the length of time. Since August 1st, they're underwater. Everybody that held a short position from there is underwater. This is a breakout as I see it to the upside. In the cattle market, we didn't quite get over this 99.55. We got today 99.50, but battleground, you can see you've been correcting and oversold. You got to the 18-day average. You're just playing around there right now. When you come to the feeder cattle market, you had broken the downtrend yesterday when you got over this number. You have a lower low, higher high, caught in a sideways pattern of the Bollinger Band. I wouldn't be surprised if you attacked that high. And in the hog market, once China said it's looking for pork, and I've told you, it's the lunar holiday, their animal numbers have been slaughtered dramatically via African swine fever. The second thing is the government about 3 weeks ago began selling state reserves of pork. Now they're doing even more, and where are they going to get that other pork from? We're ready. Is this going to be the boon? I don't know, but you were up today 3 cents in the hogs. I am hearing it's limit bid on the open tomorrow, which would be another 4.5 cents if that's reasonable. If the buying follows through. Well, from the 59.77, that's quite a move. You've just jumped about 15% or so. If that occurs, resistance, 18-day average, not a trend. You have a higher high, lower low. So you found your support at the upper Bollinger Band. I got to chuckle and ask myself, will the resistance come in at the upper Bollinger Band? That's what I'm going to be looking at. we are writing like mad about this, as you can imagine. I mean, I go in the other room and all the people that write our letters and everything, they're writing like mad in there. They're covering all this in great detail. So if you're in the agriculture sector and you're looking to see what the hog market's doing, the cattle market, what are the option traders doing in this, where are they going with it, well, this will help. We cover all these different areas, and you need not get all of them. You go in, you choose the area you want, and away you go. How do you do this? You go to our website, www.iraepstein.com, and under free offers, you'll see it. It stares you right in the face. Click it, sign up for this, and away you go. It's that simple. You can also click right here if you want to go to our webpage if you're watching me on YouTube. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.